This is Andrew Stotz of Stotz Investment Research, and oftentimes I'm asked about the concept of pre-revenue valuation for a startup. Well, that's a very difficult thing because you've got no revenue and certainly no profit. How do you value this? Well, the first step in the valuation of a company is to ask, in my opinion, is to ask these 18 questions. These 18 questions cover 5 areas. First is trust, second is the idea, third is execution, fourth is the exit, and the fifth is enthusiasm. So let's talk about trust. The first question that should be asked is, do I trust this founding team? If the answer is no, stop right there. The next question is about the product. The product idea. How amazing is this idea? How do people respond to it? That's important. Bad idea, no hope. Next thing is product proof. What level of proof is there that the product actually works? I want it to be validated in some way. Tested. Prove it to me. Number 4 is pain. Does the product solve any real pain point? Who really needs this product? Now the next question is a little bit different. Is it a disruptor? Is the product a disruptor? And if yes, then maybe market pain doesn't matter. For instance, Airbnb is a major disruptor. I wasn't facing a lot of pain when I was dealing with hotels, but Airbnb brought something new into my life. So it wasn't a fact that I had pain, it just disrupted an industry. The next question is the industry. What is the industry size and growth? Really, you're trying to assess the company's addressable market. Is it massive or is it limited? The next question is revenue. What is the revenue potential? How complete and compelling are the 5-year revenue forecasts? When I work on valuation of startups, probably 90% of the time is focused on the revenue forecast. The team must present a compelling revenue forecast. What about the intellectual property? What is it? What is actually protected or not? Is it protectable? Is it easily copied? Could it be leapfrogged with new technology? Next, we want to talk about execution. If the idea is great, the question is, can this team execute? First, we have to talk about the plan. How thorough is their business plan? Have they thought things through? Number 10, about competitors. Who are the direct competitors and how will they respond if this team arrives on the scene? This is one area that most startups don't think about, is the response of competitors to their new introduction of their product or service. Number 11 is customers. Has the exact customer segment been clearly identified? As John Lee Dumas says from Entrepreneur on Fire, the riches are in the niches. Niche down and focus on a very narrow segment. Next thing is startup experience. Number 12, how many startups have the founders been involved in? In fact, crashes and prior failures in startups is valuable for the startup team so they don't make those mistakes again. Next is the industry experience. Number 13, what is the founding team's level of industry experience? If they don't know the industry, they may have a very hard time navigating through it. Marketing. How thorough is the marketing plan? This is key because without marketing and the selling plan, you won't sell. Partners. Have potential partners or customers/partners been identified? Not every company can be a startup and start up completely on their own. In fact, it may be of advantage for them to find a partner that could be their first customer and their first investor. Sometimes this is a great way to start a business to lower the risk and have income coming from the beginning. A company that I was involved with was developing hospital software, and they had the hospital that they were developing it with become an investor in the company and their first customer. This gave them credibility, but also gave them access to the hospitals to develop the software perfectly. Meanwhile, because the hospital owned a percentage of the company, they were able to get support, and the hospital was interested in seeing the product being developed as a product not just for the hospital but to be sold around the world. Next one is sales experience. Number 16, What sales experience does the team have? Are these guys under a shell and they don't want to go out and present? Or have they had good experience with selling? After that, let's talk about exit. The question I would ask the team right from the beginning is, have you identified your top 3 potential buyers? Forget about IPO and all that fancy stuff. Focus on who would want this technology. If you could develop your product to be an add-on to a particular business, then start communicating with that business about what you're doing so they can see it. And as you progress, keep up the communication, because one day that company may decide, we like what we've seen over the years and we want to buy this company, and that is your trade sale exit. Enthusiasm. Now this one's a little funny. You may think I'm talking about the enthusiasm of the team, but no, I'm talking about how many people have I told about this idea since I learned of it. A good example is my Fitbit device. Since the day I got Fitbit, it changed my life, and I've basically told everybody I know about it. And that's because I love the product and I'm excited about the idea. I have enthusiasm. So the question is, how much enthusiasm do I have in this idea? And that is my 18th question. Ultimately, our objective, every startup dream, is to move your business from no revenue to $20 billion in revenue and great profits. And we can get there by answering these 18 questions. This startup dream just happens to be Facebook. Have a great day.